Hey guys, today's Wednesday, January the 4th of 2023, and I wanted to go over the US dollar. There's something interesting that I wanted to share with you. And if you are trading the dollars or, cross pairs or anything to that effect, this is something you probably want to be checking out and paying attention. So without any further delay, let's get into it. So there are like three important cycles, and then there's also a dominant cycle. The first cycle on the weekly chart, this one hits a peak somewhere around December or second week of December of 2023. So this one is still bullish. So just in case, this is just by looking at this, 1, 2, maybe this is 3. My other Elliott program is indicating that this is a wave 5. But just in case, this cycle is pretty much leading in regards to the forecast. If this is a 3 and this is a 4, this could be maybe the possible 5, but that's just, speculation. But I just wanted to share with you just in case we see this dollar rally strong. So that's the 395. The next one will be the 181, and this is the strongest. This is the one I've been leaning on a lot. This one peaked out around November the 21st of 2022, and this cycle is down. And this was kind of leading to me that maybe this is a wave 5. So we'll leave it there. And then the last cycle is the 227, and this one is bullish. This one hasn't even peaked out yet. This one peaks out somewhere around July, somewhere around the 17th of 2023. And then you have the dominant cycle, which is this one right here, 81. This is a little more fractal, and this one peaked out around October the 10th. This cycle is down. So mind you, the dominant cycle is down. The 181 cycle, which is the strongest one out of all of them, now is starting to go down and peaked out somewhere around November the 28th, 21st, 28th. But then you have two other cycles that are bullish. Where are you right here? It's the 395 and the 227. So you got 2 down and 2 up. So it's very tricky. And then in regards to Elliott Wave, my program is saying this is a wave 5 on the monthly and the weekly and the daily. But this also could be, if you look at it like this, 1, 2, I know Elliott Wave is subjective. Could this whole thing be a 3 and this is a 4? And it's going to line up with these 395 and 227 cycle going up to do a wave 5. Something to keep in the back of your mind just in case. But we'll continue. Let's look at the daily and see what the daily is telling us there. Okay, so this is the daily chart, and there's two that are important. One is the 288. You can see this one is bottoming out somewhere around February the 10th of 2023. It's us hitting a trough. And then there's the dominant cycle, which is 97. This one right here. And this cycle is up. It hit a trough somewhere around December 7th. You can see that the dollar has been, pushing lower while this hit a trough. And this one peaks somewhere around February 2nd of 2023. So you got the dominant cycle that's up. You have the 288, and this one cycle, hasn't even bottomed out yet. So it's interesting to see what's happening here. The weekly is a little more, in my opinion, is a little more in charge. And then the daily kind of gives you the minor corrections, So something to think about, so digest, analyze, but that's what the data is showing. We're going to go to the other clip and see what we could dissect out of there. Okay, so this is a seasonality chart. You just want to see what the dollar does. There's been months in which the US dollar closed higher than it opened from 2019 all the way to 2023. You can see that February, March are strong, January, but February, March are the strongest. Let's go to 10 years. You can see that January, February still the strongest, March also, and then April, you notice that it's the weakest within the 10-year average. February is the strongest. Go to 15, you can see that February still the strongest, April the weakest, and January strong, and March. And lastly, 20 years, you can see that they're kind of, 60, 58, but February is the strongest. And we already looked at the daily cycle, and the dominant cycle, which is 97 on the last clip I showed you, shows it peaking out somewhere around February the first week. So keep a mental note of that. Let's go to the next clip and see what we could dissect there. Okay, so this is our seasonality chart, and we don't have any data here on what's going on. So we'll start off with the 5-year. You see the 5-year, it kind of just goes kind of sideways, peaks here, hits a low on January the 12th, kind of goes sideways, and somewhere around the first week of February, it starts trending higher. And it looks like it hits peak somewhere around March the 22nd, kind of pulls back, goes sideways, and then hits a peak around May. The 10-year, kind of the similar. With the 5-year, first week of February, it kind of goes up, hits a peak somewhere around the 14th, 13th, kind of goes sideways, and kind of peaks out around July. And then let's look at the 15-year real quick, and it kind of goes sideways, but same thing, same kind of pattern. February the 1st, it kind of gets this little bump and breaks out. It's still kind of sideways, so not much to rant about, but something to look at. But we definitely know with the other seasonality chart I showed you that February, March are pretty hot, but February is the strongest one out of all the data that it showed. Okay, so this is my Elliott chart, and what I wanted to show you here is that this is the monthly. And the monthly is indicating that this is a wave 5. Interesting. Stokes are negative. We go to the weekly. It's also indicating that this is a wave 5 also right here. And what it's showing also is that we are doing a 1, 2, 3. This could be a possible 3 already in place, but if not, it could push lower, but we don't know that yet. But so let's assume that this is a wave 3. Possible targets to a wave 4 would be 105 all the way to 107. Right now we're kind of battling out the 50 SMA on the weekly. Then when you go to the daily, and this is the daily, so this is a 3 right here, around July 14, 2022, 4 on August 10th, and obviously the September 28th of 2022 is the wave 5. And we got a 1, 2. It's indicating that this is a wave 3. And we're going to do a 4 will be, targets 105, obviously, in the 107. You're fighting the 20 right now. You're going to have to deal with the 200 and the 50 SMA. But if it's going to push slower, this is not a wave 3, then you have a target of 101. So interesting dynamics. I see some levels here. In a regression channel pointing down, so you're going to have to deal with 105. And there was a target down here, had a 103 all the way to 102, but we never got down there. And this is a longer term target. If we chuckle up and even, blow through these fourth wave projection, this is a possible target. 108 to 109, and that's assuming that what the other cycles I showed you are going to play into February or March. This could be possible targets over here. There's a turning point here, February the 10th, and also March the 8th. But that's way in the future. We're just trying to see if this is going to hold and this is going to trend higher. So that's what the Elliott Wave count is showing. This is the last chart. This is what I call my master chart. And this is the 200 SMA. You can see that we were trending, but now we're kind of below it. So it'll be interesting to see what's going to happen. we're going to go above it or stay below it. A couple of things I wanted to show you. We're going to start off with the Gan fans. This one is scaled, 45 scaling, and you can see that this is the 1x1. We failed the 1x2. We're kind of stagnant here. Again, says if it fails this one, it'll probably go to the next one. But so far it hasn't done that yet, so we're kind of like floating around here in between these 2 points. You take it from the high that we have right here, we're below the 1x2 here. This is the 1x1, and you can see that it's 45 degree. It's actually scaled right, and I'm just kind of monitoring that there. You may ask, well, I was like, why did you get it from here? Well, because this is the low, and this was a fail new low, and you can put it there. You could experiment and see, if this, I always say you always have to explore and just think outside the box. You could try there, and you could try it there. So far, I tried it there because from here, squaring the range to this high was giving me some promising things that I wanted to show you. So the big picture of squaring the range from here to here, you can see that we have a turning point, and it was the December the 28th, which is the 1/8 right here. And we just got this nice little pop. Although we have stalled right here because we are hitting this, this angle right here. You can say it's a 1x1 because it's in the middle. So it's like a 45 degree angle from here. Squaring the range, mind you, not, from this high. So we're kind of stalling here, but if we could get above that angle and actually close above 105, it's looking very promising because you got this open space here. Now, if you go fractal, this is the amazing thing about the fractal. From this here to here, you're assuming this is a low. You can see that we stopped right here. This is the 1/8. And we're kind of stalling there at that 104 and change. But if we could get above there and hold, that's going to look very promising for, a rally into February, March. You can see this is a center right here, which is the end of January, around 123, towards the last week of January. So we want to kind of keep monitoring these little turning points, or the midpoint from this range. If this holds, if it doesn't hold and it pushes lower, then this will be void. We got to go back to this. But the 28th was looking good. And I also did the astro chart from this 28th high. And there was something lining up here for the 28th. So I want to see how this is going to play out. If we could just close above these two things, I'm going to be trading this, cross pairs, maybe, short gold, because I'm looking for gold to pull back. And this is probably going to be the catalyst to get gold to come back down. So you could probably short gold, go long the dollar, or, short the currencies, the euro, the pound, whatever, is, cross pair the dollar, and then kind of wait for it to steam out. And it all depends if this is a wave 5, and we down here, is this going to be the A, B, C going down? But then you think, well, the cycles you showed me earlier on the weekly, if that's up all the way to March, April, May, this could probably be a wave 3, and this is a 4, and we're going to even push higher. So those are the little things that I'm kind of, entertaining in my mind. But, I'm just taking it one day at a time, but I wanted to kind of share that with you. Let's look at some other things here. Let's cross that out. Using the solar cycle. The solar cycle says you got to go long now. So it's already giving us a buy signal here, lined up with that 1/8 timing point, squaring the range. So little what I call anomalies, weird stuff is like, why is all this lining up right here? And then we get this nice little bull kicker. So you got to look at volume, you got to look at all these things and just see what happens. And it says that it peaks out somewhere around March. So let's see how that's going to play out. Using our spectrum analyzer here on a timing solution, I got 3 important cycles here, and this bottomed out somewhere around December. You can see there's been consolidating, and we're almost having a breakout, but this is data from the 3rd, not today. So it'll be interesting to see how it's going to play out. But this one is peaking out somewhere around March, to the 21st. Change of season, or again, we'll call it the new year, January, but March. So those are little things you need to pay attention to. And then I also ran neural net. I had my other charts that got corrupted, so I had to do this all over. So I'm using a cash close and running a neural net, to 50. It's telling me keep an eye on January the 12th and keep an eye on February the 24th. And also April the 21st. So let's see what the computer is thinking and what he's, he or she is analyzing. And then let's see how it all plays out going into April. Seasonality wise, let's see what's going on here. Annual, says go long all the way to March. Annual decimal. Says maybe they could pull back onto, January 16th and kind of rally, pull back and forth to March. So March is looking very hot to the upside. And the fast and mid bottomed out here. The mid kind of getting toppy over here around the 8th. Then it pulls back. So, we'll see how that plays out. And looking at Gann's technique, look at the 10-year and the 20-year, and it looks like, the 10-year is getting a little toppy on the 8th, 9th, 10th, and it pulls back to the 1st. And the 20, I think I looked at the 20, doesn't look too good. It just continues going down all the way to June. So those what the 20 years ago, what price action was doing. The annual quant strategy is kind of saying you need to be going long around this time, and even on January 26th all the way to the 31st. So it's kind of doing calculations from the last 10 years, and it's quantifying that in regards to probability that chances are prices are going to go higher. So it's telling us you should go long. So I'll leave it at that. That's up to you to decide, but this is what the quant is indicating. As you can see, it was saying to go long here, and then it stopped here and it missed the peak, and it said it was going down here, and it kind of did go down, but then it turned around. So you have to take this with a grain of salt, but if you're leading for a direction, it's kind of saying the trend now is to the upside. So that remains to be seen. I'll leave it at that. I don't think I have anything else to cover. I got to save this chart just in case I didn't save it. And I'll keep you posted on the dollar, but keep an eye on the dollar. This December 28th low is very interesting. And I don't know if this is an ABC doing a B now and then going down, or this is a wave 3 and wave 5 is still coming. So those are the little things I'm kind of trying to wrap around my mind in regards to analysis on the dollar. But either way, whatever happens, wherever it's going to go, whatever it's going to do, keep an eye on the dollar. I'll leave it at that. I'm going to sign out. Hope you like this video, and I'll keep you posted on my thoughts on the dollar using cycle and Gann analysis.